It's also important to consider the overall market conditions when making stock investments. While it's impossible to predict the future with certainty, there are certain economic indicators that can provide insight into the health of the market. For example, low unemployment rates, strong GDP growth, and healthy consumer confidence are generally positive signs for the stock market. On the other hand, high inflation rates, geopolitical tensions, and economic downturns can all negatively impact the stock market. When it comes to building a diversified stock portfolio, consider investing in a mix of different sectors and asset classes. This can help mitigate risk and ensure that your portfolio is well-positioned to weather market volatility. For example, you might consider investing in a mix of large-cap, mid-cap, and small-cap stocks, as well as a mix of domestic and international stocks. You might also consider investing in a mix of growth stocks, value stocks, and income-generating stocks. Another important factor to consider when making stock investments is your own risk tolerance. Everyone's financial situation and goals are different, and it's important to invest in a way that aligns with your own comfort level. If you're nearing retirement and need to protect your nest egg, you might be more comfortable investing in stable, income-generating stocks. On the other hand, if you're younger and have a longer time horizon, you might be more comfortable taking on more risk in pursuit of higher returns. When it comes to managing your stock portfolio, it's important to regularly review and rebalance your investments. This can help ensure that your portfolio remains diversified and aligned with your financial goals. Consider setting aside time each quarter or each year to review your portfolio and make any necessary adjustments. Finally, it's important to remember that stock investment is a long-term game. While it's natural to want to see quick returns, the reality is that building wealth through stocks takes time. Be patient, stay disciplined, and avoid the temptation to make impulsive decisions based on short-term market movements. In conclusion, stock investment can indeed be a powerful tool for creating long-term income. By doing your research, investing in dividend aristocrats and companies with a history of share buybacks, diversifying your portfolio, and staying disciplined over the long term, you can create a stream of passive income that has the potential to pay you forever. However, it's important to approach stock investment with a clear understanding of the risks and rewards involved, and to always invest in a way that aligns with your own financial goals and risk tolerance. Any strategy for finding stocks that can pay you forever is to invest in dividend aristocrats. These are companies that have increased their dividends for at least 25 consecutive years. Dividend aristocrats have a proven track record of financial stability and a commitment to rewarding shareholders. By investing in these companies, you can create a steady stream of passive income that has the potential to grow over time. Another strategy is to invest in companies with a history of share buybacks. Share buybacks occur when a company uses its cash reserves to buy back its own shares from the open market. This reduces the number of outstanding shares, which can increase the value of the remaining shares and boost earnings per share. Companies that regularly buy back their own shares are often committed to creating value for shareholders, which can make them attractive long-term investments. It's also important to consider the overall market conditions when making stock investments. While it's impossible to predict the future,